Hey traders, Thomas DeLello here with your order flow market update for Friday, October 11th. And we're going to point out what happened here in the market here this afternoon and what we're looking for going forward. But before we do, because this is very relevant to what happened today, as it is relevant to pretty much what happens every single day in the market throughout the day, you need to train your mind to see the reality of the market as opposed to the inaccurate perception that most people hold about what's actually driving price, and really to get down into it and understand the actions that the market makers and the smart money are engaging in, day out to manipulate and profit from the markets, right? If you think about why price moves, and guys, you have to be asking yourselves these types of questions, it moves due to the intent and motivations of the smart money, right? The trader's responsible for moving price from point A to point B. Right? And it's important to realize how these traders, the smart money, the market makers, the algos, the HFTs that everybody talks about, how they try and bully the markets to certain levels just to run the stops, and then they turn around and they take it right back to the other end of the range and run stops in the other direction. This is what they do. Why do they run the stops? Is it just to put the screws to the retail traders? No, well, maybe a little bit, but it's about liquidity. These big traders in the market need liquidity. And they're generally not willing to execute positions, at least not on an aggressive basis, at any price, at any random spot in the range. They need liquidity. And they need this liquidity, this deep liquidity, in order to minimize their costs, their slippage, their pricing. If they execute in low liquidity, it's going to cost them profit. So large volume traders need deep liquidity to execute positions at minimal cost of execution, right? So they're trying to hit pockets of stops from one end of the range to the other all day long, every day. So keep this in mind when thinking about market structure and why price moves as it does. Price will tend to be driven to areas of deep liquidity, right? And deep liquidity equates to where the stops are, right? So that the large volume traders, the smart money traders, can liquidate existing positions and accumulate new positions, right? Because as you begin to truly understand this basic foundational concept, and we're going to get much deeper into this as time goes on, you'll begin to get a better idea about where that liquidity is in the markets, where the stops are that they're trying to target, and logically begin to identify where in the market it makes sense to do business. All right, guys, I had to pause the video there because this worked out pretty good. We got a live VT trade here as we were making the video, and we set up shorts here, so I had to pause the video and manage a couple positions there. We'll talk about that in 1 second, but I just want to finish this point first. Here's the thing. You start to trade at a lot higher level of confidence and efficiency once you understand the order flow that's coming into the market and driving price, and you start to understand why price is moving the way that it is. I mean, how could you not, right? You understand why price is moving from point A to point B, and it goes deeper than that. You begin to be able to identify ahead of time where point B is, and then what you want to do at point B. What are the clues that you're going to look for in order to initiate shorts, not only here at highs, anticipating the market topping out into all these stops, but also, perfect example, again, this couldn't have worked out better for the sake of this video, live value transition trade. This is one of our core setups, and if you haven't seen one of our videos explaining what the value transition trade is, you should really get to do that. We'll be doing more videos on this as well, but this is more of a conservative setup, right? We have the short bias, right? And if you're an order flow trader, you understand the way that we trade. We're looking for shorts on the uptick here, right? So it's a matter of when we get into our IT levels where we're looking for the stops to get hit there. This is point B, right? This is where the algos and the smart money are trying to run the market into, right? Now it's a matter of, okay, do I want to enter based more on anticipation of exhaustion here, really here, right? Point B, the first time you're coming into this area, or do you want to wait for a little bit more confirmation where you still have your short bias and say, all right, let me start to see this vertical development cease. Let me start to see some rotational activity in here. And now I could look to sell upticks, and now I have new useful reference points in here. Not only that, we're coming into the bottom of a older supply zone here, right? So do you want to get short here? Do you want to get short here? Or do you want to wait for the most conservative of our setups, the VT trade, the value transition trade, and this was perfect. We had a new zone set up in here. I mean, the zone was here when we started the video. Now the market has, it broke away from the zone, so we see where the zone is ahead of time. Now we know we have a short bias. And again, whether you're scalping, you're swing trading, whether you want to use this as an opportunity to build into your position, make your short position bigger, whatever the case may be, or you're just looking for a quick little scalp here, like we just did just now. You have this area already identified, right? So now the market comes up and you're not thinking about it. You're just executing, right? You're showing short commitment on the uptick. You already have your short bias in here, because of the exhaustion based on all those stops getting hit, and now there's just not enough buying power to keep the market going up. Just excellent example of the smart money and the algos and how they're operating in the market. And I'll tell you that the computers, the algos, you lump them in with smart money, but they all know when everyone in the market gets too long, everyone gets too short, right? The programs, the algos, they feel out the market depth by reading the very same information that we read, right? And this is the information that we trade off every day. And once these algos lock in on the stops, it kind of becomes a foregone conclusion that that's where they're going to go into and hit those stops. Now, we can't predict. We never know, hey, are they going to be able to find more stops above? But we know the areas that they're targeting. We know the clues that we're looking for in order to initiate shorts in that general area, right? And another note, guys, I don't see this whole algo thing as a negative. I embrace the algos, the HFTs. I like seeing them on the stops because I know that opportunity is setting up when they do, and that's what they do. They feed on the stops, and when the stops are getting hit, that equates to losing traders getting stopped out of trades. That further equates to opportunities for us. Trade patient, trade well, everybody. Have a great weekend. We'll see you soon.